Good morning, students. So, as you know, yesterday we have discussed the types of different expenses as well as the income. Today we will learn how the accounting treatment of those expenses and income is to be done. First is outstanding expense. Yesterday we have discussed that the outstanding expense are those expense which are due to pay. So the journal entry for the outstanding expense will be whatever the expense, debit all expenses and income as per the rule. So expense account debit to outstanding because outstanding expense, as I quoted earlier, that it is the liability of the business and liabilities are always credit in nature. So it will be credited. So that will become for outstanding expense, expense account debit to outstanding expense. Outstanding expense will become our liability and expense is the nominal in nature in which we have to apply the rule debit all expenses and credit all income and gain. Prepaid prepaid expense is the expense that is paid in advance. It has become the asset for the business. So whenever it is paid, expense account debit to cash, the entry will be there. But when it is prepaid account, expense account debit, prepaid expense account debit to expense account. So next is related to income. Unearned unearned income is the liability for the business. So the entry will become income account debit, whatever the income it is, that will be debited to unearned income, as the unearned income is the liability for the business. Whatever the income related to that we have received, that will be debited because it is not yet received, and unearned income, the income that is received in advance, will become our liability. Accrued income. Accrued income is an asset for the business. So accrued income account debit to income account. Now, sometime in the business, this happen like when we purchase any fixed asset and we use it, always get depreciate, means the value decreases. For an example, say sometime what happens, suppose you purchase a new car of rupees 10 lakh from the showroom, and after 2 years whether the value remains same? No, the value will not remain same. With the passage of time, when you use that car, due to obsolescence as a new technology is there, due to tear wear, due to use, due to so many reasons, the value of that fixed asset decrease. Very similar to that. This is a personal example. Very similar to that in every business, when so many fixed assets are to be used, those assets with the time, with the use, with tear wear, with the obsolescence, due to any of the cause, the value of those fixed assets decrease. So the decrease in the value of fixed asset is known as depreciation. So what is depreciation? Depreciation is the decrease in the value of fixed assets due to due to use here where time obsolescence, etc. So that is known as the depreciation. Depreciation are kind of loss for the business. So the rule will be applicable over here, debit all losses and expenses. So when we pass the entry for the depreciation, the entry will become depreciation account debit 2, as there is decrease in the value of fixed asset. Basically, assets are debit in nature, but the value, when the value decrease, that asset account will be credited. So the entry will be depreciation account debit to fixed assets. Now, our next point is interest on capital. See what happened. There are two things. One is your there are two things. One is your business and another is your businessman. Now, what the businessman do? Just businessman invest the capital in the business. What the businessman do? Businessman invest the capital in the. Now, when the businessman invests the capital in the business, in the return, what the businessman will get? He is just investing the capital in the business. In return, what he'll get? In return, he'll get the interest on capital. This interest on capital is given by the firm or given by the business to the businessman. So interest on capital given to the businessman, that will become an expense for the business, and it is not given in cash, it is added to the capital of the businessman. So the entry will become interest on capital, as interest on capital is an expense for the business. So interest on capital account debit, interest on capital account debit to capital account, as it increased the capital of the entrepreneur or the businessman. See, I'm repeating once again. There is a businessman. See, there is a businessman. Businessman just invest the capital in the business. Invest the capital. In the return, the business give interest on capital to the businessman. Businessman give capital to business. Business give interest on capital to businessman. So interest on capital will become the expense for the business, so it will be debit and capital will be credit. Vice versa. Drawings are also there. Again, business and businessman is there. If businessman withdrew any money for the personal use, withdrew money for personal use, what happened in that case? It become the drawings for the business. We withdrew the money for personal use, it become the drawings. So whenever any drawings are to be made, the businessman has to pay interest on those drawings. So businessman withdrew the money for the personal use. Let me mark it. See, businessman withdrew the money for personal use. In return, the businessman give interest on drawing to the business. Business will get interest on drawing. So interest on drawing will become in a way the income for the business, and it increase the drawings of the businessman. So drawings account debit to interest on drawings. Because as the capital interest on capital is not paid in cash, very similar to that, interest on drawing is also not received in cash. It increase the value of the drawings of the business. So this is all about for the day. Tomorrow we will just do the numerical of these entries or all these concepts. If anybody have any doubt, please ask.